Wow, what a week it's been. The market went from near all-time highs on Monday to doom and gloom by Friday. The Dow had the worst week since October 2020, punctuated by a 500-point drop on Friday and ending the week down 3.5%. The S&P 500 ended the week down 1.9%. The Russell 2000, which represents small cap, was the worst performing of the major indexes and was down 4.4%. The tech-heavy Nasdaq ended the week relatively flat, down 0.3%. Currently, the futures market is red, with both the Dow and the S&P futures down around 0.5%, and the Nasdaq 100 future down around 0.25%. The bear news came on Friday from Jim Bullard, the head of the Federal Reserve of the Bank of St. Louis, who has penciled in an interest rate increase in 2022. I've linked my earlier video on my thoughts after the results of the latest Fed meeting, which ended Wednesday. So if you'd like to see how I allocated my portfolio in response to the latest Fed decisions, feel free to click the link below. Now, to keep it simple, the Federal Open Market Committee consists of 12 members, 7 permanent and 5 floating. These 12 members get to determine interest rates and whether to adjust interest rates. Bullard is a floating member. He cannot cast a vote to change interest rate this year. However, in 2022, Bullard will be one of the 12 members who gets to vote on whether to change the interest rate. The majority of the 12 members, fortunately, don't see eye to eye with Bullard. In fact, the majority of the members who get to vote in 2022 see an interest rate increase in 2023, not 2022. Now, I'm not a financial advisor, and nothing I say in this video can be construed as financial advice. But in my personal opinion, what's happening right now and what caused the drop on Friday are a series of panic moves by investors who are spooked by one of the 12 Federal Open Market Committee members with voting rights next year, indicating an interest rate increase not this year, but sometime next year. If I have to make a prediction on how the market will perform next week, I would say that big tech is going to continue to outperform the rest of the market. Starting off with Amazon is kicking off its Prime Day, which extends 2 days this year. And Amazon traditionally does pretty well before and on Prime Day. I also think that the market has already priced in how inflation and the rise in interest rates may affect big tech. As you may remember, big tech had its reckoning with inflation from mid-February to early March, when many tech companies dropped 10 to 20% from their all-time highs, despite recently reporting record profits. This happened while many valued companies were marching and hitting their all-time highs. I think now investors are beginning to consider how inflation and the rise in interest rates would affect value stocks. That is one reason why big tech is going to perform next week. Now, let's take a look at how I did for the week. I ended the week down about even, up 0.6%. I had reallocated my portfolio on Wednesday so that I could start trading a series where I trade a 500,000 portfolio to 5 million. I bought AMD on Thursday. Unfortunately, I bought it a little late at almost its high. On Friday, I sold my holdings in Best Buy, and I also sold a July 16 cover call on First Solar FLSR with a strike price of $82.50, which is around $1 more than the cost per share that I paid for to buy First Solar. Now, the premium I received for writing the call is around $130. And my reasoning is that if First Solar goes above $82.50, the strike price, then I get to cash out with the gain, use that money elsewhere, and keep the premium. Alternatively, if First Solar does not close above $82.50, then I keep the premium And on top of that, I get to write a new cover call and get paid a new premium. I'm also looking to unload Cigna, but not because I don't believe in the long-term potential of Cigna, but rather because I'm trying to increase my positions in tech. Looking ahead next week, I'm looking for opportunities to increase my positions in Facebook, Google, and Microsoft. All three companies have had record earnings, and I don't see any reason why any of the three companies will not continue to have record earnings. I'm also looking to buy 6-month out at the money QQQ calls. I believe that big tech will continue to outperform in the next 6 months. But I would prefer to buy QQQ calls when QQQ is trading a little bit lower than it's close to all-time high. And then in addition to tech, I'm also looking at IWM. As you can see from this chart, IWM has a resistance level here, here, here at around $213, and it's hit and bounced back this resistance level 3 times over the last few months. IWM is currently trading at $222, but if it has a few more red days, be it due to inflation or fear of the rise in interest rates, then I'm looking to buy 6-month to expiration at the money calls on IWM if it hits around $213. Now, let me know how your strategies are for the next week, whether you plan to accumulate, hold, or hit the panic button in the comments below. As always, I want to thank you for watching, and please hit the subscribe button. Thank you.